So Deven needs no introduction, but it is my responsibility that I introduce him. He is the managing director of Deven Choksey Wealth Management Services, and he's an extremely well-known figure. Both his name is very popular, and on the media also, on the TV also, he features quite sometime, many times. In a day. He has been associated with the stock market and the wealth market for over 3 decades now. One of their unique selling points, the USP, is that they nurture a company right from its nascent stage and take it all along till it becomes a multi-bagger and beyond. They remain invested forever, as Mr. Warren Buffett used to say, forever. Without taking too much time, I would like to now finish a few formalities, that is, of thanking a few people. I would sincerely like to thank the office bearers for having given us the opportunity and the permission to do this to organize the lecture, especially Mr. Vijay Mehta, our Vice President, who did all these arrangements and everything so smoothly. The managing committee, a few members, managing committee members are sitting here. Mr. Anil Mahesh, he is the immediate past president of our club. Mr. Anil Mahesh is sitting here. Mr. Bharat Kapadia is sitting in front. Mr. Jagat Illawala is here. He has also come. And the trustee of the Juhu Gymkhana, Mr. Suresh Doshi, is sitting in front also. Well, before I move ahead, I would sincerely like to thank a dear friend of mine, Mr. Suketu Mehta, who is responsible for having coordinated the lecture. And for people who don't know, he is a childhood friend of Mr. Deven Choksey. So without taking much time, friends, please join your hands together and welcome Mr. Deven Choksey. May I request our past president, Mr. Anil Mesh, to please come and give a bouquet to Deven. Okay, to please join.
कहाँ पे खड़ा आ गया बहुत जाएंगे तो नीचे जाएंगे ऊपर अच्छा है थैंक यू सो मच थैंक यू गुड इवनिंग फ्रेंड्स Actually, Ojas bhai, I don't require this introduction. I'm part of you. You have given me this opportunity to come and stand before you and share my thoughts with you all. So very happy to be here. And when Suketu called me, I think at the beginning of January, with this time in budget, he wants me to share my thoughts with you all. I said, as such, I think it's not required because out here, the enlightened crowd, completely enlightened crowd. I think you don't require to share too many things with people who are already aware about many things. However, I'll try and make some attempt to share a few thoughts of mine. So as such, the media is playing a good role in educating all of us. I don't have to go too much into detail. That is what Suketu told me. That people want to hear from you about the stock market and not the budget. This afternoon he is telling me this. I said, dangerous, I think you need to change the banner that you have created. But nonetheless, I think this is a good time, I think, to share a few thoughts with you all. On Sunday, I think I don't recollect, I think, when the budget was presented on Sunday. Probably this time around, I think it was presented on Sunday and all of us attended also on Sunday. And the market volume on Sunday was 3 times more than I think the volume that we normally do on a single day. So just imagine, I think if you want to keep market open on Sunday, people are interested in playing on Sunday. What is so important about, I think, this budget? Why people have 2 opinions about this budget? Something which we all must know, I think, where exactly all of us are coming from. In last 10, 11 years, Since this government has taken charge, few good things have happened according to me. They have been fairly consistent with their agenda and the priorities. If they say that they want to create the economy where the growth is sustainable, they have ensured that the growth is sustainable. And that is the basic theme of this budget as well. In fact, if I have to put across one line summarization before elaboration, this budget is back to basic and this budget is back to balancing. Why it is back to basic? We had a situation during the COVID times when exceptionally in different kind of environment got created. We had to deal with that environment. Our finances got affected, including between the income and expenditure. The expenditure shot up largely because of I think COVID related issues, including vaccinations, etc. And as we call it in the financial language, fiscal deficit. The meaning of fiscal deficit against the income when your expenditure shoots up, I think the gap is a deficit. Generally, we would like to say a good economy is a good economy where your revenue is higher compared to your expenditure. But in a developing economy, I think that is not the case. In a developing economy, I think normally your expenditure is higher. That's what I think what we have seen. In this budget, when we saw the estimated expenditure, this budget is all about, I think, about 53-54 lakh crore worth of expenditure budget. As against which, I think the income estimated is around 44 lakh crores. They've brought down for FY27 this gap to 4.3% of GDP. And the roadmap that they have chalked out is to bring down this deficit to 3.5% by FY30, by 2030, which means that the government has given one important commitment here. And this commitment is all about that our deficit would be narrowing down, it will come down slowly and gradually. And because this deficit comes down, what it means for the economy? A, government's on borrowing is not increasing. When the government is not increasing their borrowing, the cost of interest comes down. When the cost of interest comes down, inflation comes down. When inflation comes down, our spending power increases. So it's a cycle. Why I'm explaining this part, very few people would realize when we talk about, I think, higher amount of inflation in the country, महंगाई बढ़ गई है. At that time, I think we don't realize that if the government itself is a borrower, then the cost of fund will go up. Here, the government is a disciplined borrower. They are borrowing, but they are disciplined borrower. And as a result of which, I think over last few years, we have seen the cost of interest has come down. Government borrowing has remained largely restrictive. In fact, this government, possibly, if you ask me, in last 10, 11 years, consistently have demonstrated that they don't require to borrow. They are mobilizing resources from somewhere else, from everywhere else. In fact, I think higher amount of investments has also started coming in because of this field policy. Another important point, I think, in this budget, which they have clearly said, our gross debt to GDP would be 50% by 2030. Today it is 55%. Once again, this is a signal to outside world that the borrowing is not going to go up. Today, even if you look at country like America, their gross borrowing, the debt, if you want to call it as nation's debt, is somewhere around $38 trillion. This is about 110% higher to their GDP, which means they are overly leveraged. Developed nation like America. India, to its GDP, is just half, or getting into half. Again, it's a very strong signal to the world that this country is going to have financial discipline. When the world watches this data, they realize few things. That this is a place to invest in. Here, your investment will remain safe because the borrowing program of the government is disciplined. Growth rate in the economy is consistent. In this budget, 10% GDP growth rate has been projected. Our current GDP is about 4%, 4 trillion US dollars. By 2035, at the 10% nominal GDP growth rate, if you have to see our economy, it will be somewhere around 10.5 to 10.7 trillion US dollars, which means I think the economy is going to grow from here in the next 10 years, and the borrowing is not growing. This is a clear message which comes out of this budget. If this message has to be taken by some global investors, they would start writing checks, looking at, I think, the country which is following the growth program with fiscal discipline. And that is why we call it is an act of balancing that they have been very smartly doing. In this budget, few more things have actually happened, and that is where our larger amount of confidence is coming from. For the first time, a business like data center has been talked about in budget, and they talk this particular subject by way of introduction of 20 years of tax holiday for companies which are going to be putting up a data center in the country. Now, what is data center? I think we all are aware about to an extent that our data which stays in the cloud, the computing power is provided from that particular space because over there the computers are kept, the servers are kept. The world is moving fast in the direction of AI, and every single businesses they would be adapting to AI like never before. Here is an opportunity. Giving 20 years of tax holiday to somebody to provide services, data center services to outside world and not charging them tax is a direct invitation to them to come into country, invest into the country. This roadmap had to be given. If you indeed want to attract large capital, this roadmap had to be given. If you ask me, I consider this particular movement as a Maruti movement of 1980s. When Suzuki came into India, they set up this company Maruti in which Suzuki came in as a company as a partner. And at that time, Suzuki came with a promise that they'll be delivering the Japanese vehicles. They did not come alone. They came along with a bunch of ecosystem, including the ancillaries. Today, after 40 years, you find that Indian automobile is a force to reckon with. We are the third largest car manufacturing country of the world. This change has happened largely because I think this moment was played. Something similar is happening now with data center movement. In 1980s, late 80s, early 90s onwards, it was a moment wherein I think we started creating the entire IT services in this country. And thereafter, I think we created the acts of TCS, Infosys. Those kind of companies came up in the horizon. Today, undoubtedly, India is the IT factory of the world. We are supplying the IT solutions to the world. Same situation is happening now with data centers. How it will change and what is the investment opportunity is something which we should be talking about. 1 gigawatt of data center, if you want to set up, depending on the profile of the services that you cater to. Either it is hyperscaler, which means I think the AI related service is built into it, or normal data center services. 1 gigawatt of data center by a thumb rule will cost between 30 to 80 billion US dollars. That is a thumb rule. Now, when they come into the country, this data center requires power. They require water because air conditioning, cooling also is required for them. And of course, they require the balance component in form of IT and other space, networking as well. IT skills India has proven. So I think we are already there. World is looking at us favorably because I think these skills are available with us. The power and the water. These two areas are the ones I think which are going to be taking significantly large amount of investments. So this government few years back started the program that we will be creating a renewable power. At that time, I think we all thought that renewable power more because of other reasons. But at the back of the mind, the agenda was typically the power guzzler industries like data center, they required to be provided with the renewable power. And then came last year budget, I believe, the 1 crore household rooftop, I think with solar panels. We all thought that I think they are basically taking care of the rural masses by way of providing this subsidy for households, I think, which will be creating the rooftop solar. Yes, one of the purpose was that, as per the math, I think 18,000 crore of rupees would be saved in the hands of the people. They would not require to pay electricity bill because I think that is available to them through the solar rooftop. But more importantly, very smartly, government said that I think grid power will have to be reserved for the purpose of higher industry applications. No wonder 2027 target which we had kept for renewable power, India achieved that target 2 years before, that is in 2025. And most likely by 2030, the target we have kept, total electricity demand by 2030 in our country would be somewhere around 850 to 875 gigawatt kind of requirement would be there. Out of this requirement, about 60% or 70% of the requirement will come from the renewable power. And we are almost there in that direction. Most likely by 2027, we may have achieved the total power requirement. Now, where exactly we will use this power? We have put across the entire power plants. Reliance is putting across power plant in Kutch. Adani is putting across power plant in Kutch. In fact, Reliance is renewable facility that they are creating out there in Jamnagar. It is more than four times, I think, of size of Singapore actually. That means I think four Singapores get added together, and I think there is one facility which is getting created in Jamnagar. We are creating the computing factory of the world in India, and government had to step in. They gave this fantastic incentive by way of allowing the corporates to come into the country, global corporates to come into country, use tax-free status, whereas in the other parts of the world, USA 45% tax, Canada 54% tax. Rest of the places in the world, I think they are having significantly large amount of tax. Here, we are giving a proposition: come into this country, operate, don't pay tax for next 20 years, and keep investing in this country. So it is not only the data center which will come; it comes along with the entire system of renewable power generation. It reminds me of a few things as to how exactly this is going to change, the landscape is going to change. China recently carried out one successful pilot. It's a subject called Ocean Refinery. If some of you want to Google it afterwards, I think you can Google it. What does it mean? The Sinopec, the Chinese refining company, they carried out this particular pilot in which they used the waste heat generated from refinery to run the green hydrogen plant. The green hydrogen plant is a green hydrogen. Why it is called green hydrogen? Because I think it is not using the conventional power, thermal power. It is in the green power. this waste heat, which is otherwise thrown back into the system, in the space, that heat has been converted to carry out the process of desalination of water from ocean. On one side, the water came out, other side the green hydrogen came out. The water which they produce out of this entire process, desalination is not a new industry. It is by the way existing, but I think we are using the conventional power to desalinate the water. Here, I think they are using the green power to desalinate the water. With this particular process, the drinking water came out, segregating the green hydrogen out of it through electrolyzer process. The drinking water came out, which is costing 25 rupees for 1,000 liter. In a normal desalination process, it costs you about 85 rupees to 1,000 desalination, 1,000 liter. Something in Jamnagar is already happening. So the point here is that I think on one side you use the water from ocean, did the electrolyzer process, produce green hydrogen, use this green hydrogen as a power to run the refinery. Water which came out started using this water for drinking purpose as well or other industrial uses as well. And whatever the residue which came out from this desalination process, bromine, lithium, and magnesium, which normally I think they would dump it into sea. These three residues have also been taken out and they are further used. Lithium, we are very commonly aware about, it is used for the storage batteries, power storage batteries. So, this experiment is telling us something. Why the government is taking such decision of inviting the foreign players to come into the country, give them 20 years of tax exemptions and building this particular industry. Because it is not going to be only a data center, it's going to be the entire ecosystem. Whatever you produce ultimately, I think, is going to be used by the country. And the amount of investment which could come into data center, which is an opportunity for all of us. And I am not counting this opportunity for 1 month, 2 months, 3 months from now. As I said, it's a Maruti effect. Those who invested in Maruti when it came up in the public market till what today it is, I think it has given some phenomenal return. I don't have to count that number today. The data center capacity in the world budgeted to be by 2030 close to around 245 to 250 gigawatts. Currently, it is between 45 to 50 gigawatts. We are talking about 5 times increase in the data center capacity in the world. In fact, I think one of the studies says that the world is not going to build many office buildings, world is not going to build many malls and the showrooms, world is not going to build as many number of houses as much as the construction going to happen in the area of data center in next 5 years. And it is at this point of time the government is playing cards. They are attracting foreign capital into the country by way of this tax measure. In my viewpoint, if the numbers prove us right tomorrow, I think we are going to be attracting significantly large amount of investment into this country. We don't have the numbers, but I think you can extrapolate the number. If you have to create additional 200 gigawatt of capacity, and if the average cost is between 30 to 60 or 30 to 80 billion dollars, you can convert into numbers. It would turn out to be some trillion dollars of investment, which would be required by the world to create the data center. In fact, Elon Musk is already into a different orbit right now. He is saying that in SpaceX, he wants to put across a satellite in the sky so that I think they solve few problems. This satellite will be a data center, so everything would be getting computed in the sky. So you don't require a separate air conditioning system. That is what I think the underlying assumption is. And because the solar power is available, so you don't even require to power this satellite beyond a point because solar power is available. Now, suppose if this kind of experiment succeeds, and if you have already positioned yourself in this kind of environment, the opportunity is at next level. And we are talking about, I think, creating the opportunity in our portfolio, not for now, also for, I think, future. So this is one important key takeaway as far as the budget is concerned, and which we have liked it. There are other areas wherein I think they have further concentrated. This time around in the budget, along with the infrastructure spending, they have added one more area which is called urbanization. Up till now, in last 10, 11 years, I think we have seen the government has been focusing on building the infrastructure, roadways, railways, waterways, airports, power utilities, gas, data communication. All have been, I think, significantly been focused, I think, to build, and they have been continuing to build further. This year also the allocation has been on a higher side for most of these items. They've added one more area which is called urbanization. What is urbanization? The cities in which we all live, they require to get modernized. The requirement of the city is increasing because the prosperity is increasing at the same time. Here, the government has identified tier 2, tier 3 cities, including temple towns, Varanasi, Mahakal, Somnath, Dwarka, many other southern places. I think the important point which they want to drive here is that tier 2, tier 3 cities should also get equipped to handle the kind of growth that the economy is producing. In fact, 60% of our GDP contribution comes from cities. Though we want to focus on the rural areas, which we must, but at the same time, 60% of the GDP comes out of the cities. And here the thought process is important. Investment is definitely taking place. The thought process here says that if you modernize cities, if you empower cities with the requirement, including sanitation facility, water facility, electricity, gas, make them smart cities. This is what I think they want to do. And this is where, for the first time, they encourage even the funding through municipal bonds. Again, it's a very smart move as I see it. On one side, coming from financial market, of course, I think on one side, I think you're giving a birth to the financial product called bonds, which is basically raising money from people and deploying it for the infrastructure purpose. For example, the city in which we all are staying here, our expenditure budget is around 75,000 crores. And our deposit, DMC's deposit base, runs into tens of thousands of crores. Why I'm not giving exact figure? Because many of us would know that how much deposit is parked in cooperative banks and what happens to that deposit after the cooperative bank receives that money. We don't want to discuss this subject for today at least. But this government has seized the problem. It is more important. They've realized that the municipalities are not operating their financials in a disciplined manner. And as a result of which, I think they said that municipalities can borrow money. And for borrowing money, you have to go for rating. For going to rating, you have to put your house in order, make your financials proper. So, a very smart move. For every 1,000 crore worth of bond issue that you do, we will support you with 100 crores incentive. Plus, interest subvention scheme also has been provided into this. That means the municipalities are told, put your house in order, we are there to support you. After a few years, maybe, I think we'll find, I think, each one of them competing for creating the infrastructure because this vehicle is now made available through budgetary provision. So we like this particular approach largely because if the cities get modern, probably I think the infiltration into cities will also probably come down because over a period of time, tier 2, tier 3 cities themselves start housing their population instead of I think they're coming into metros. So that part I think is going to be a positive effect. How it will help us from coming from the investment point of view, each and every area of business I think is given encouragement. Construction activity to start with. Infrastructure building is always construction to begin with, and rest of the items follows. In fact, I think one real estate project in which about 150 different agencies get involved. 150, cement to tiles to electric cables to pipes to n number of agencies would get involved. And we feel that I think if you are going with this kind of approach of modernizing cities, again I think the business condition is emerging for higher amount of growth. Other important point I think which they have sensed it, and this is again important. I think most of us would probably want to understand this subject as well. Last night, I think America and India signed the bilateral trade agreement, BTA as we call them as. And why America suddenly, I think, want to sign when until now I think they've been refusing. We have been putting our conditions to them that this is what we want to do. We want to protect our farmers. We don't want to ruin our agriculture, etc., etc. Suddenly, why America had to hurry up? In my viewpoint and the insight which I carry, probably I think which I would like to share. We signed up with European Union, 27 countries, a $200 billion deal in which we opened up the boundaries on both sides. So our export is becoming free. Their export to our countries, I think, comes with a little bit calibrated numbers. Like certain amount of vehicles can be imported to of a premium category, etc. So we gave a signal to America that we are going ahead by signing the trade agreements with other parts of the world. We signed with European Union. For 20 years, India could not do it. This year, Indian government did. So obviously, I think a lot of homework must have happened before which it will not happen. Other countries like UAE, Singapore, other places, Asian countries, we have started signing the free trade agreements. Australia, and I believe that I think it makes a lot of sense. Every stage, I think, when you sign the agreement, you are starting the business to happen. I think next few years from now. If $200 billion worth of trade agreement signed with European Union 5 years from now, that means you have got a visibility now for growth. With America, this agreement which we have signed is $500 billion, and over there they would like to export their items, agriculture items, some of them which we don't even cultivate in this country. They want to export it here. We have said, okay, 0% duty, no problem. Anyway, we are not manufacturing, not growing. On other side, our industrial products, energy related, technology related, we have signed up the deal with them, and that is now made available to us. The reduced duty is now 18% from what it is to be 50%. We have actually ended up creating a FOMO effect that can be easily summarized from this particular narrative. That we ended up silently signing up with other countries, and America felt that I think they are going to be missed out if India is going to move in this direction so aggressively. They signed it up. But there is one more important reason for which I think they signed up. We all have been reading in the newspaper about shortage of rare earth material. A rare earth material is material I think which is basically mined and we extract out of it, and it is required for the purpose of producing silica and for semiconductor purpose. I think this material is required to be mined. So nine nations came together in December under the leadership of America, including Japan, Singapore, among others, and they signed up a treaty that they call it Ex Silica. Ex Silica is a treaty which they signed up, in which they decided that in order to make ourselves more reliant on each other in future years, let us create a treaty wherein I think we all share our resources. We produce semiconductors, we produce chips, it is used for computing, AI related advancement, etc. But for that, whatever the raw material which is required, let's come together. So they signed it. They did not include India in the first place. In January 2026, they ended up including India into this. And they sent across the agreement to India. Indian government did not sign because they were waiting for this treaty to sign. We did not sign this agreement. And at the same time, on Sunday, many people ask this question, why on Sunday the budget? Probably one of the answers is this also. On Sunday, we are making an announcement that we are creating mining corridors in four states: Orissa, Andhra Pradesh, Kerala, and Tamil Nadu. In four states, we are creating the mining corridors, wherein we will be putting significant amount of emphasis on mining this material, producing the raw material for manufacturing of silica and the semiconductors. They saw this coming in. They said that these guys are aggressively moving ahead with a dedicated approach. In fact, they also set up three chemical zones wherein plug and play systems are going to be created, where anybody wanting to create the chemical facilities, I think they would be allowed to just operate the chemical plants through a complete infrastructure built around it. I think this has been noticed by America, and that could be one of the reasons for which it is sudden rush. Why next day morning, Monday morning? Why you want to start? Could be one of the reasons. Forget about that. I think we are basically more interested in if this industry comes in India, what exactly is the prospect for us for investors? We believe that this mining material, when it happens, we are going to be significantly growing our own industrial growth because I think the raw material is available. Today we are dependent on China. World is dependent on China. Why we alone? Everybody is dependent on China for that matter. They took an advanced calculation into account, and that is where probably I think they are successful with the mining of this rich material. We are not lagging behind. We may be slow, but we have a habit of I think disrupting the world. We come late in every area, but I think we take over others in the world. Classic example is data communication. We may have come late in this particular technology, but today I think we sell data which nobody else in the world can even think about. Right? In each and every industry, this is India. We basically do this, and America very well understands this subject, according to me. Probably, I think that is another reason for which I think this announcement in the budget came up. As we see it, in the semiconductor area, about 40,000 crore worth of allocations have happened. In the mining area, about 20,000 crore worth of budgetary allocations have happened. In seven different industries, including chemical, a significant amount of money has been allocated. I'm building the base at this juncture to communicate that if this kind of money, when it gets invested into the economy, the next best thing that will come out would be return on investment because you're investing money today. Next thing which will come out would be return on investment. We are also investing in this particular times a fast railway project of seven different new railway lines which we are putting across. Bullet train is a different thing. The fast railway system is another thing, which is not bullet train. We are investing into this area as well. And again, I think the emphasis has been given that if the commuting time has to be saved, this is the opportunity that India should not miss out. So again, I think this is an investment time that we are seeing in various industries which are going to come up. So friends, I think the various proposals are there in the budget. And I'm not going to run through each and every proposal because most of them are known. But some of these key proposals, according to me, which are creating a life size opportunity, they must be understood in this detail. So, who all benefits out of it? This is a time when the economy is transforming. I think, as I have shared the number, a 10% GDP rate of growth. 10 years fast forward, we are talking about growing the size by 2.5 times. Generally, economy and market capitalization, they move 1 is to 1 generally. In case of America, it is 1 is 1.4. They are probably trading at a premium, and we'll talk about that premium as well. In case of China, it is half. On a $19 trillion economy, the market cap is $9.5 billion. India, On a $4 trillion economy, market cap is $5 trillion. Okay. If the economy size has to grow 2.5 times, $5 trillion market cap will go equally well by 2.5 times. We are talking about 12 to $15 trillion worth of market cap, market wealth in next 10 years time from now. So many a times I tell people jocularly कि 10 साल के अंदर इतना पैसा बढ़ रहा है, आप कुछ काम नहीं करोगे फिर भी आपका वेल्थ 3 गुना बढ़ने वाला है. So it is better, I think, to remain little passive and lazy instead of punting into the stock market and trade in the FNO. Have I touched the subject now? You, most of the us, I think we want to make fast money, and that is where probably I think the FNO related STT में जो थोड़ा bubble बचा है, so that is why it has happened. We'll talk it out in a lighter manner, I think, with little while after. But more importantly, if the capital is growing in 10 years, 3x, what more you want to do? You only need to do a systematic planning of your investment. Invest right and sit tight. Don't try and do too many things. The experience of the world says, the people who have created the wealth, it says, those who remain patient about wealth creation, they indeed created a huge amount of wealth. Those who are playing around in the market on a day-to-day basis, they probably, I think, break the capital. They don't grow the capital. Many a times people ask me why I'm talking this from podium when it is affecting my own business. It's not about my business. It's about how smartly we grow our capital. One equation probably I think I have shared on various forums. Maybe it is easy for all of you to I think take it back home. If your 100 rupee compounds at the rate of 30% for next 10 years, anybody in this audience can tell me that what would be the value of that 100 rupee? Sorry? Sorry. Grossly under number. If you compound 100 at the rate of 30, that 30, the figure which comes out is 1489. And this is the power of compounding. That is why we believe that if this is available to all of us, what are we doing in the process? Are we systematically investing or are we trading? If you are investing, this is an ocean available to you. And some of the companies which are creating the kind of investment portfolio is amazing. In our lifetime, we are seeing this kind of numbers. Today, the largest private sector company in the country is operating on 2 lakh crore EBITDA on a yearly basis. And with the new investment that they are doing in the renewable sector, they are promising to grow 2 lakh crore to 4.5 lakh crore in a span of next 3 to 4 years. Just imagine, I think, where exactly your wealth is getting multiplied. The largest company which is today producing EBITDA of 2 lakh crore in a 3.5 to 4 years, or at the worst 5 years, they are talking of doubling the size to 4.5 lakh crores. Where do you want to invest your money? One who has got the capability to produce growth is a place where you will be investing your money. If you try and punt around in a smaller companies, probably I think you grow small. Many a times I think we believe that I think the small companies give faster return. Yes, it does give faster return. It has given faster return. But when out of 8 years, in 2 years, this company gives faster return. In balance 6 years, you do wicket keeping. Those stock prices they never move. Because our market becomes euphoric in these 2 years and they give disproportionately high valuation to those companies. So our point of view here is that this is an era when we talk about the size of opportunity, when we talk about the bilateral trade agreements, when we talk about the budgetary allocations, our approach here is that invest in those companies who have the ability to build further amount of growth in their businesses. And some of the large companies are going to become larger. In fact, I think if you can't remember so many things, just remember this one word. This is an era where the big is getting bigger. Whether you like it or not, the big is getting bigger. The Magnificent Nine of America, they are today valued. Magnificent Nine are the likes of the alphabet, that is Google, Apple, Microsoft, Amazon, Nvidia. The Nvidia's market cap is more than our country's GDP. Nvidia, Netflix, you can probably name those nine companies. These nine companies, out of America's total market wealth of $69 trillion, these nine companies command one third of that market cap, 24.5 trillion dollars. We are basically undermining the power of compounding, which just now I explained. Those companies which are having the larger capability to produce the profit, they are going to be the ultimate winners. People will actually look at them for investment. I'll give another aspect to it. If you walk into this country and if you want to invest large size investment of your portfolio, and we are talking about those investors, I gave a simple example. Few years back, I ended up meeting one family office in Switzerland. At that point of time, the family office's net worth was more than the India's GDP. One family office's net worth more than India's GDP. So this is the amount of money that they carry. And I was excited. I said, "Okay, why don't you come and invest in India?" He said, "How much allocation can I make out of my wealth?" At the best, I can issue a check of less than 1% of my wealth for investing in your country. That is the size of that country, the size of that company, family office, investor. We believe that I think if you create the large size proposition, then some of the large wealthy investors who are operating outside the country, they could be walking into this country. And this budget has exactly provided for. In fact, I think one of the provision which is right now announced but not completely spelled out, because of RBI is supposed to give the mechanism to it, which is related to FEMA into non-debt instrument. And when they say FEMA into non-debt instrument, they are talking about inviting the foreign capital into other than debt instrument. Another debt instrument, I think, could be equity by and large. If that money has to come into equity, and if that person is not foreign financial institution, FPI or FII as we call them as, but if that person is other than that, an individual like you and me, and he is allowed to bring that money into our country, you can imagine, I think, where he will write his check. He will probably follow a business which is giving him an entry of a large size check. If my market capitalization is 20 lakh crore, I will get, I think, 10,000 crore worth of check. If a company's market cap itself is 10,000 crore, we will write a check for that company of more than 100 crore, more than 200 crores. So the point remains here. We are all here to understand some of the aspects as to in a change environment, how do we operate is extremely important. We require subject understanding, which probably I think I've tried to share with you, which I am carrying. How the macro understanding helps us in taking the investment decision is something which probably I think is a clear underlying message here. If we see that the larger part of the macro picture is clear to you, it gives you the confidence to sail through in the rough weather. And a rough weather could be like this, that your rupee drops from 84 to 92. Is a rough weather. Somebody asked me a question that, is it justified rupee dropping to 92? I said, no, it's not justified. Today, GDP is 10% growth projected. Inflation is lower, sub 4%. Interest rate sub 4%, government securities 10-year yield sub 7%. Everything is on the lower side. There is practically, I think, all checkbox items, if you want to put it here, they are all showing that I think India is probably the finest disciplined growth oriented destination. Yet your currency is going down. Why? This is another subject I think which we have to understand before making an investment. The currency is going down not because of your fault. Dollar has also gone down, yet I think Indian rupee has gone down. Generally, it should be other way around. When dollar goes down, I think the rupee should appreciate because we are back to the dollar. Here, the challenge is that most of the global traders who have entered into our market. This is one more area which I think all of us must understand. Many a times, I think we get upset with market ups and down movement. The global traders, which we call them FIIs or FPIs, they come into the market to trade. We have given them a name of investor. They are actually big time traders. They trade in the market. They trade derivative market. They take large position in derivative market. And against that, in their country, the banks are so much flush with funds. They have no choice but to, I think, lend this money at a absolutely, I think, unimaginable cost. So those companies, out of $100 that they would have their own capital, they would probably get $95 from their bankers by way of leverage fund. So they enter into the market with $195 and they play around. So for them, daily basis algorithm trading is a requirement. They trade. And for them, this trading is a compulsive habit because I think they have leveraged this money. On that leverage, they want to make 2%, 3%, 4% after deducting the currency depreciation cost. That's what their game is, and they play in this market. Now, when this size of players they come, they trade in this market. If you start punting with them in derivative market, what would happen to you? You're a small pygmy in this entire world. I think your size of the fund, including I think best of the insurance companies fund, is nowhere comparable to I think what they trade. Recently, without naming that particular entity, I think you have seen how SEBI penalized them. And in 1 minute, I think they wrote a check of 4,500 crores deposited with SEBI. You conduct your inspection, allow me to trade. For them, 4,500 crore rupees check, I think, was given to SEBI. Keep it in your escrow account till the time I think you find out the solution whether I manipulated the market or not. I'm giving you this money, but allow me to trade. SEBI next day morning opened the door for him. They allowed them to trade. This is the kind of power that they have with their money, and that could be one of the reasons for which I think this particular situation has happened. That in this budget, government has put in STT, which is far more larger, sounding far more bigger. On future contracts, 150% increase in STT, security transaction tax. For those of you who do not understand, I'll elaborate. And on option transaction, 50% increase in STT they have brought in. And suddenly the market went into tailspin and they said, look, this is not done. You are increasing STT. The government has a compulsion to restrict this speculation. Please understand. Your currency is dropping because these people are pulling the money out of the system in an abrupt manner. No fault of the economy yet, I think they're pulling out the money. Government had to act. They can act only by way of levying penalties tax. Somebody want to call it a sin tax. They can only act because of this particular approach. They can't stop anybody. It's a free market. You can't stop anybody, but you can create deterrence. So that is what they could do. They did. And suddenly the entire market participants started feeling that STT is unjustified. For some of you, I think this information may be important. For every 1 rupee of equity in India, India trade 40 times derivative market, 40 on an average. The next best market who trades most derivative is South Korea, 30 times. Market like USA is trading 22 times, which means we want to use the derivative market for speculation. For every asset of yours, I think you are trading 40 times. What will happen to you? I think in one stroke, I think your capital will get wiped off. That is what I think the SEBI data says, that I think most of the retail investors are losing money in this market. But still, we want to trade because by the law of probability also, I think three transactions out of 10, I think you will be successful. So that keeps me going and I keep trading. But this is the reason for which I think the STT tax came in of such a size. Look at, I think, how it is making life difficult for others in the entire country. When your currency depreciates by 10% in a span of 6 to 8 months, your entire import bill goes haywire. How do you plan your budget when your import bill goes haywire because of the currency depreciation of this magnitude? Yes, 3 to 4% depreciation is always planned. But if in a quick succession, I think around 10% currency drop has taken place, difficult. It can put your economy into reverse gear. And quite possible that some of the foreign traders, they may have an interest that the India should not progress faster. That could be one of the reasons for which I think the government had to take this decision of putting tax on security transactions. So, friends, I think there are many provisions, there are reasons. We are understanding all of these reasons and the provisions largely because I think we want to be investors. In rough weather, how do we sustain ourselves? How do we hold our portfolio intact? How do we invest in good quality stocks? I think that's the approach. So maybe I think with this background about the budget, in my viewpoint, this budget is a silent message provider. This budget is a silent message provider. It has provided the message to the world that we are going to be fiscally disciplined country. We would be inviting foreign investment where it makes, I think, sense for both of us, a win-win for both of us. We would be signing contracts with different countries of the world for expanding our trade, and we will be operating with our terms as much as possible because we are 145 crore market to the world. This is the message which comes out very clearly in this budget. This is the picture which we draw out of this budget. We believe that I think this budget is a one-day event agreed. ये तो ट्रेलर चलता है एक दिन के अंदर, पूरा मूवी इज गेटिंग rolled out in subsequent period of time. Last year they presented in budget income free for 12 lakh rupees. Everybody said we did not expect this. You have given fantastic reward to us. This year some people started saying this year income tax में कोई reduction नहीं दिया. They said it very clearly कि for next 5 years don't ask for any reduction now. I have given you everything in one shot. But they are smart. They gave it in one shot. They collected more tax. This year, March ended 26, still 2 months to go. Expected tax collection from personal income tax would be 14.7 lakh crores. And corporate tax collection for the first time in the history of India would be lower than individual tax collection, 12.5 lakh crores. Right? We are GST, they reduced the rate of GST in September. GST is net contributing around 10.5 lakh crores because we have to share part of it to the states. Tax collection is higher when tax rate is lower. Theory. No economist will take this call. Only a businessman who becomes prime minister, he will take this call. Bring down the tax rate, encourage people to invest more in the country. Your mutual fund SIP, which used to be around 14-15,000 crore per month, has jumped up to 30,000 crore per month. By 2027, it is expected it will touch 50,000 crore per month because you have given tax concession. For a family of four, till the time you earn income of 50 lakh rupees, that is 10 lakh rupees per account, rounded up to 50 lakhs in four members of the family, you don't pay tax. Show me one country in the world which has got this particular tax-free ability other than the Gulf countries. We have created something extraordinary and we are reaping the benefits out of it. In my viewpoint, I think whatever has been announced in the previous budget, the benefits are now coming in. Today, the average GST collection per month after the cut in GST rates is 2 lakh crore per month gross. It used to be 1.75 to 1.8. That means those people who wanted to buy something and they were buying in cash, they have now started putting money through the UPI transactions, I believe. So frankly, I think the opportunity size is growing opportunities. But in my viewpoint, I think this is a summary of the budget that I find myself in this budget.